You can now pay the IRS your taxes in crypto. That's right, you can link a digital wallet and pay the IRS. irs.gov/payments now has this option available. But should you? My name is Andrew Gordon. I'm an attorney and CPA, and every year my firm helps hundreds of clients report crypto on their taxes and minimize the amount of taxes that they need to pay. We now have an option to pay taxes in crypto, but is this wise? Well, let's break it down. In general, if you spend crypto, for instance, if you have Bitcoin, Ethereum, or any token that's not a stable currency, and you spend it for a purchase or to pay an expense, this is a taxable transaction. It's treated as the disposition or sale of that asset. And you'll not only need to report it on your tax returns, but you'll need to calculate a gain or loss on that sale. And that gain or loss is calculated as the difference between your sales price and your cost basis and what you initially purchased it for. And so for individuals that are holding crypto that is appreciated over time, it's increased in value, and you're now selling it or spending it to pay your taxes, you're going to have a gain and owe taxes on your payment of taxes. And so you need to not only be aware of this, but it might also just be a bad idea because you're spending this crypto, having to pay your tax, now owe an additional tax on it if there's a gain. Also important to always make investment decisions, and we're not providing investment advice in this video, but for many people, they don't want to spend or get rid of crypto, especially to pay something like taxes. But the most important thing to know is that if you have a crypto token and you are spending it, even to pay your taxes, it is a taxable event in the next year. And so next year, say right now it's 2024, and you spend crypto to pay your taxes, then on your 2024 taxes that you prepare in 2025, you will have an additional taxable event. And let's say in 2025, you then pay your taxes again with crypto. Well, then you're going to have another taxable event that's going to go on the next year's tax return, and on we go. So it's great to see. I'm very excited that the IRS has this option. It shows that the IRS is forward thinking, but at the same time, it's also just showing that the IRS wants to use all opportunities, all options available to collect tax. They want to make it as easy as possible for people to pay their tax because they want to collect as much as possible. So as a taxpayer, may not be a wise decision. At the same time, there could be cases where it is to your benefit. Let's say, for example, you are sitting on a loss on a certain crypto token. Well, then you might be thinking you want to harvest that loss anyways and sell it in order to generate that capital loss to use on your taxes. Well, spending it for the purpose of paying your taxes will also generate this capital loss. So it's wise to look at your overall picture and determine if a spend is part of an overall plan to minimize your taxes, and if so, then consider it. But for most people, spending crypto to pay your taxes just doesn't make sense. Thank you for watching, and if you know anyone that might benefit from this video and maybe even has a bag of crypto and needs to pay their taxes, share it with them. Thank you.